What's up, guys? Huey here. So real quick, I just wanted to take a second to make this video for you guys explaining the options profit calculator, which is a website that allows you to measure the potential gain and loss of a play that you have already entered, or see what how a possible play can perform that you plan on entering. It allows you to see the potential percentage gains and losses as well as the dollar gain and loss. So I'm just gonna jump right into it. So I'm gonna go to Google and just type in options profit calculator. That's the very first hit. And I'm gonna run a few of my plays here so that you can basically see what you can potentially make on this play. So these are both calls. So I'm gonna go to the basic, just long call, bullish long call. So let's quickly chop up this pins 80 call. So I type in the ticker symbol and I get price. It shows me the current price. So I'm buying, right? I'm not selling options. I'm buying options. So let's go to the contract. You click select option, then you go to the expiration date that you chose, which in this case it's December 18th, and I am on an 80 call. So I'm going to click 0.98, right? Because that's what that particular contract is trading for at the moment. So I got into two contracts on this, so it shows you my total cost here. However, I paid less than this, right? I'm already in the play. Typically, you want to get into this this options profit calculator prior to getting into play. Like if you have enough time and you want to calculate how it'll move, you can come in and enter all these parameters. I typically do this after I'm already in a play. And for price per option, I want to go into my screen and go down to where it says average cost. So I got this for 67. The total cost for this was $134 for these two contracts. I also want to click manual entry options, and then I want to change the implied volatility, right? I want it to be the most accurate that it can be. So I'll go down to my screen and I'll see that it's 63.62, 63.62%. And then I want to set a range. Actually, we leave it at auto for now. And then I'll click calculate, right? And then it returns this. So this is the percentage of maximum risk, and what we want to do is we want to see the actual dollar value of what we're making, right? So as it stands, the current price of Pinterest is $69.80. So I'm like right on this line here, right? And it shows you where your expiration is here on, and then it shows you the strike price of the underlying stock, Pinterest. So today's the 30th. If tomorrow Pinterest goes to 75, then I'm gonna have, and I click that, I'm gonna have $480 total equity minus what it cost me to enter the play, which was 134, which shows me a profit of $346. Let's say Pinterest runs on by the 5th. Let's say Pinterest runs to 80, right? And now I'm in the money. I'll click here. It'll show me my percentage, which is 476, and then it'll give me my total equity position, which will be 772 minus the initial 134 that I spent on the two contracts, giving me a total profit of 638. Right? I think that this is super useful because, for example, let's say Pinterest range trades and it stays at around 70, 71, right? And it trades between this price and this price for the next like 4 or 5 days. Once I start getting into this territory, I'm losing my profits, right? If I'm on a trend where I can stay above this kind of line right here, then there's a possibility that I can do one of these, right? If I'm in a situation where I'm kind of going this way, then maybe I can set my stop loss and get out of the position, right? On the date of expiry, which is December 18th, if the stock price is trading at $80.50, then the total value of my two contracts will be $34, right? So that's why we don't like to hold into expiration. It's better to take profit early, like over here, just because you can see how time decay really kicks in towards the end of this. And then, if I'm at $80, I'm in the money, $80 on the expiration, I lose 100% of my position, right? So that this gives you a good idea of the potential of where you can be with your trade. So let's just do another example real quick. So I'm up on this trade right now. I am currently up 46% on this trade. Let's look at a trade that I'm down on, right? So let's go to eBay, and I'm going to select my option. It's a January 15th, and I am in the 60 call. So I'm going to go here, just click the middle one. And there's variations to this, right? But what the most important part is you want to go into your price per option and you want to adjust it to match whatever it is that you actually paid, right? So I paid $41 for 2 contracts. I'm currently down 24% on this. I'm going to go to my implied volatility, and I'm going to edit it to match exactly what it says on my screen here, which is 36.88. And I'm going to calculate. And now I just want to make sure that this gives you a profit loss of actual dollar value. So as of today, you know, the ticker price is trading, the ticker currently is trading at 50.46, right where this line is. And I'm down $20, right? I'm down 20 bucks. So it's a little bit off, right? It's not precise, but it gives you kind of a range and a guideline. So if this thing trades flat for a few days, and you can see it's very easy for me to get clapped, right? However, if it makes a nice upward move, you know, any day that eBay decides to run, it can easily put me in the green. You know, if it's, for example, $55.50 by December 15th, then I'll be at 100%, 107%, and I'll take home $88 worth of profit. If eBay is trading at $59 by December 19th, then I'll be at 368% up, and that's $300 in profit. And if you click it, then it shows you, you know, pretty much when you sell it, what the price will be, what your total amount of gain is, minus your initial entry cost, and shows you your profit. This also works to the downside. I do not currently have any put examples to show you. You know what? Actually, that's not true. I am in a put play for Palantir. I am in a Jan 15, 17 put. So actually what I want to do is I want to go over here and I want to click long put bearish, right? Because it's going to calculate it. It's going to do the math a little differently. So I type in the ticker symbol, get price. And you can always adjust this. To be precise, you want to adjust this to the actual last price. But it's pretty accurate, so I'll leave it. I'll go to the contract that I'm in, which is a Jan 15, 17 put. And for this contract, I paid $1.21. I didn't get the best entry on this, and I just decided to play one just to see how the put side would work on Palantir. I know it's been on a crazy run. I'll go to manual entry, and I'll make sure to match the IV that I have on my Thinkorswim, which is 140.32. And then I'll click calculate, and then you'll see that it's the exact opposite, right? So I need, you know, instead of on the call side, you need things to go up in order for you to make money, but on the put side, you need things to go down in order for you to make money. So if Palantir actually gets in the money by, let's call it December 15th, then I can take home 129% on this play, you know, and I click it, and it's basically the one position, the contract will be worth 277, and then you subtract my initial, what it cost me to buy that contract, and this is my profit. So that's a really easy way for you guys to calculate, you know, what the potential profit that you can make or loss that you can take on a trade once you're already in the trade, and also even before you take the trade, right? You can decide whether or not you look at the Greeks, and if you don't understand how to read the Greeks immediately, you can look at what the potentials are by just kind of plugging the numbers in here and seeing what it returns. And this also gives you you know, some advanced strategies like spreads, iron condor, straddles, and strangles. So yeah, guys, check it out. I just wanted to make this quick video because I saw the question pop up a bunch of times, and I hope that it will be helpful to you. Peace.